Hello, and welcome to zForex educational series. Before we start, don't forget to subscribe to get the market updates. Many of you consider fundamental analysis and technical analysis as one thing. So what is the difference between fundamental analysis and technical analysis? Traders can analyze the market in two initial ways: fundamental analysis and technical analysis. So let's break it down. So let's start with the fundamental analysis. The fundamental analysis is basically analyzing what's happening in the current economy and what's happening in the markets, and based on it, predict what's going to happen in the future. For example, it examines the impact of factors such as economic growth, unemployment rates, and inflation on a country's financial assets, such as the United States. It also considers extraordinary events such as war, earthquake, and potential crisis. Fundamental analysis, though, aims to determine whether the value of an asset is undervalued or overvalued. It essentially attempts to decide the true value of an asset. If the decided value is below the market price, the trader may consider buying the asset. If it's above the market price, then you may consider selling it. On the other hand, we have technical analysis, which predicts future prices based on the past data. Technical analysis reflects all market information in the price of a financial asset. It therefore relies on predictions derived from past price movements. Technical analysis uses patterns and indicators to understand the price movement. So let's dig down into patterns. Patterns occur when price movements are not linear, and similar patterns often appear in price movements. These recurring characteristic features can be displayed in certain shapes that provide information about changes or continuations of market trends. So let's check some of the most popular market trends. Head and shoulders, inverse head and shoulders, double top pattern, pullbacks, cup and handle pattern, flag and pennant pattern, triangle patterns, cup pattern, inverse cup pattern, and the most popular one, candlestick patterns, or what's also called Japanese candlestick. Another tool, indicators. It plays a very important role in the financial analysis. Indicators are mathematically based functions developed to evaluate the direction of the price of an asset. These functions, which imply the price curve, are widely used by technical analysts. Some of the most popular indicators: relative strength index, moving average, stochastics, MACD. If we were to discuss the main differences between fundamental and technical analysis in general, the main difference lay in their approach to the valuation of financial assets. Fundamental analysis focuses on studying factors related to the financial asset, while technical analysis focuses exclusively on historical data of the asset. Fundamental analysis is a method that aims to determine the value of a financial asset in order to identify long-term investment opportunities, while technical analysis, on the other hand, primarily seeks to predict price trends and trading volume based on historical data, particularly in the context of short-term equities. Don't forget to check our website to get daily and weekly market analysis.